Now, I've been asked a lot on this channel, can you scalp using Renko charts? Now, the simple answer is yes, and in this video, I'm going to show you how. Now, before we even get into the Renko scalping rules and setup, we've got to make some careful considerations around the market that we want to trade, or markets that we want to trade in the scalping environment. 3 considerations I like to think about when I'm setting up. First one is volatility. Is it very volatile? Making it too difficult to scalp, you get bounced around too much, or is there no volatility in there at all, giving you no opportunities to trade? We need a nice blend, and that leads us nicely into liquidity. Is there enough volume throughout the day to get in and out of those trades? And because of that liquidity, if it's a very liquid market you're trading, the spreads of the trade are likely to be lower, and therefore the ease of scalping, making a profit is much easier. So you've got to bear the costs of the trade involved. And then the final consideration I like to put in there is time. And what do I mean by time? Is the market open long enough for you to have many opportunities in the trading day, or is it maybe just specifically to a period of time within the trading day that it's only a useful strategy? Now, you don't want to get stuck with trades, and you can have a strict rule set around getting in and out, but does the market itself give you enough time and enough opportunity to give you the trades that you want? So 3 considerations, like I say, volatility, liquidity and time. So with that factored into selecting our markets to trade, let's get into the Renko side of things. Now, scalping using Renko charts is very similar, and especially similar to the strategies and ideas I put forward in this channel, and I will put a playlist at the end of this video that you can follow if you want to dive more into the sort of general background of Renko that I've been putting out here on this site. But there are some differences, and those differences come in the rule set, the way you manage your trades, setting the block size, and we're going to dig into those shortly. But before we do that, I also get asked, what markets can you scalp on? And from my own experience, it works very nicely in stocks, especially US ones, commodities, the more liquid ones like copper, gold, WTI, Forex, very easy on the pairs, and stock market indices like the DAX, NASDAQ, S&P, FTSE, all of those. It is very good for scalping, but you do have to get the setup right, follow the rules, have a very strict trade and risk management plan in place if you want to succeed at scalping using Renko, or scalping full stop for that matter, using any chart type. So with that, let's get into the detail of the rules and the setup. So for the purposes of this video, I'm using the S&P 500 as my market of choice to illustrate what we're going to go through here. But don't panic, it's exactly the same for all markets, and you can, like I say, apply those rules consistently across whether it's FX, commodities, indices, the lot. Do not panic, like I said, it's just for illustrative purposes. And in front of you, we're going to be starting with the candlestick daily chart, and I'm using ticker ES1 here. That's the CME futures E-mini contract, but if you're into the S&P 500, SPY, SPX, CFDs, there's plenty of choices to trade that market. Like I said, you just do the same analysis approach. And what have I added on here? Well, I've added on a historical volatility indicator, which is the blue line, and ATR, which is the red line. And you can find them by going up to the top indicators, typing HV for historical volatility, ATR for average true range, and you'll be able to pull those back. Why am I here first in this type of chart? Well, one of the most important things about Renko trading and Renko scalping trading is the block size. That's one of the most important things to get your scalping working. So we need to get the right block size, very important. Now remember, first part of the video, those 3 considerations, well, they're all in here as well. So we've got a nice sort of trending market at the moment, as we know the S&P 500 can be. historical volatility. Now I've put this white line, which is a 50 period moving average, just to smooth it out, just to give me an easier idea of what's going on volatility wise, and it's quite low. It's 14%, 14.04, ranging up to maybe 37, 38 if it gets really volatile, down to 8 if things quieten down, which can make it tricky to trade. And that's why I've taken the average there to give me an idea. Now if I saw that on a market with low liquidity, low volume, I might not be so interested, because that could mean harder to get in and out the trade, higher spreads. But as you can see up here, we've got a decent amount of volatility, so that's ticking those considerations around volatility and liquidity. So we now, with that, and also I suppose the third one there before I jump the gun, time, we know this is, well, especially if you're trading the futures, almost a 24/5 market, so we've got plenty of time. And as you can see, volume's quite consistent over the whole day, so there's plenty of chance to get in and out your trade. So let's give that another tick. So back down to the ATR, we need to do the block size. Now as you can see, at the moment that number's around about $50-60. That means for every day we can expect that sort of movement range in either direction, and it can go up a lot higher, $90-100, and you could have put, like I did on historical volatility, a moving average in there as well, which would probably come out more around about $60. So that's going to be my starting point. Now remember from other videos, I normally take about 20%, especially when it's a lesser volatile asset like this one. Remember, it's about 14%. So my first block size for a standard chart here for the S&P 500 will be about $12. So we've then got to take that into the Renko chart setup, plug that in, and then we, like I say, move on to the next phase, which is getting the block size for the scalping process. So here it is in a familiar setup to those used to my channel. We've got the $12 block size, which you can see set in there. Let's just show you how that is. Traditional 12 set there, and that's given us this Renko chart. I've also added on the stochastic and Bollinger Band breakout. We're going to look at those in a minute, but we need our scalping block size. So what do I do from here? So I know this is my standard block size, so I'm now going to look for a smaller percentage of that block size. Now, like I said, it's critical for success of scalping. And another thing you'll notice is the smaller the block size, the more it starts to resemble a more traditional candlestick chart in regards its movement. And that's good and bad, because it's will give you a lot more whipsaws in the price noise as you go smaller. But we're sticking with the Renko blocks because it does again make the noise of the charts a lot clearer, a lot more transparent, and allows us, I think, to make more effective trading decisions. So top tip here, if you're going scalping, then get the smaller block size. So what are the rules I use here? Well, depending on how volatile the market is, I'm looking for a percentage of the general setup. Now we've got 12 here. Now I'm going to normally start in a market like this at 50% of the 12 size. So my block size here is going to be about $6 for the S&P. Now, depending on how volatile the instrument is, remember the S&P compared to some isn't as volatile. I might make that a little bigger if it was more volatile. Say you're into Bitcoin or something like that. I'd be maybe even closer just to scalping at that initial level and seeing what sort of results I got. But for the more traditional markets, look for about 50% of the first block size you get, but also tweak it. Don't just take that as read. Have a look, like I said, if you're using things like stochastics, by changing the block size, you get these different levels in the stochastics, and we want something that's transparent, that shows it very clearly going up through 20 and down through 80. We don't want a lot of noise in between. So that's like a eyeball of your result. So let's now just create a secondary chart with the $6 block size. So here you go. On the right now we have the $6 S&P 500 set up, and you can see doing that eyeball check that I talked about, it looks quite nice. You've got it coming up nicely through the 20, stays around to capture that trend, comes back on down, and we've got a breakout here of the bands as well. That's another strategy. We're going to have a touch on those different approaches we can take for scalping here, but as you can see, it looks like it makes sense at this sort of block size. So do a sense check of what's going on. You can see there on the left the 12 and the 6, and we're going to look at some rules about the higher time, higher price blocks as well. Another important factor is the actual chart, well, I don't like to say it, time in the Renko world, because we know it is more about price than time. But if you're using packages like TradingView for your charts, you're going to have to set some time period. Now I've set it to 1 minute in both. That's because I want these blocks to be repainting themselves very, very quickly. I don't want to wait for 5 minutes, 10 minutes. It's too slow. You're going to miss out the trades that we want to see. And think of it also like a candlestick chart. Are you trading the candlestick chart when it closes at the end of a period, or are you trading it within that period on the candlestick chart? And it's the same sort of mindset over into the world of Renko charts. But like I said, if you're using a chart package that does have a time element to the Renko, then set it to as low as you can go, and I've got 1 minute. So every time that 1 minute window closes, I'm going to get my new blocks closed out and painted on the chart. So very important there as well. So focusing in on the $6 block size chart, we're now thinking about getting into the trade. So what ways can we do? Now, I would never just follow randomly the changes of the colors, from green to reds and reds to greens, to indicate the trend change. It's not going to work, too dangerous. Price action trading on Renko, quite tricky, but you can help yourself. You can create the support resistance zones using trend lines and analysis that way. There's no harm in doing that, looking for breakouts of certain patterns. That's one way of getting in and scalping. You could maybe use that in conjunction with an indicator for divergence, for example. And looking at the setup here, we got stochastics at the bottom, and this one's set to 533, and all I'm doing here is waiting for it to go and break on up through the 20. Stay in the trade, get out of it when it goes down through the 80 maybe. That's one approach. Or like here, we've got these offset Bollinger Bands. What do I mean offset? Well, if we look at the settings, I've just moved it slightly to 1015, so it then creates these more obvious breakout zones. Take the trade when it breaks on out, as your entry clarification. So there's lots of ways of getting into the trade for scalping. We got, like I said, we've seen here breakouts, patterns, divergence, using indicators, but I need more confirmation to take out the bad trades and put the odds more in our side. So like I say, I'm looking for certain types of confirmation that are going to help us, like I said, put the odds on our side. So now including the $12 Renko setup there on the right hand side, this is one way I like to confirm. I like to use the higher time frame as the trend filter. So if I see that going bullish, then I'm going to go into the scalping chart, the $6 one here in this example, and trade in that direction. So that is one idea of confirmation, and I like to call that Renko price cycles. I'm going to actually do a separate video on that because it's a useful strategy or trading approach in itself. But bear in mind using the higher time frames to get yourself a trend filter. Now, another confirmation tool for the S&P 500, I like to use the VIX index, and I've done a video, a whole full course on that for free on the YouTube channel. But again, link it at the end of this video for you to follow if you want to learn more about that. But there's an inverse relationship between the VIX and the S&P. So at the top here you can see 2 time frames of the VIX, 3 hour and 15 minute, and I've put on a white line which is the moving average. The blue line is the actual VIX number. Now VIX is above it. To me, that means the price is bearish, and vice versa. So I'm using that a bit like that trend filter to help me into the trades in the scalping window. And as you can see there, we've got the $12 in the bottom left and the $6 in the bottom right. But again, to me, we've got into the trade. It's not just about that part. You're not guaranteed success. Crucial when you're scalping to have very strong, strict risk and trade management process in place. So let's focus in on the trade management part. Now we're going to first of all start with stop loss. So where should I be putting the stop loss? So let's take our chart here. Let's take an obvious example. I would be looking, if I was being quite aggressive, under the swings of those Renko blocks, and look, I would also take a visual look to the left to see any price action, any similar type of areas that the price has pulled back to. So in this example, that block was around about at its low 4266, maybe sticking that in there at 4255, so a $10 stop. Or you could also use historical volatility. We know how much it moves in a day through our average true range, but like I say, you could take the HV and then work out a time period that you would normally last in these scalping trades. Now scalping trades don't just have to last a few seconds, they could last a few hours, so you've got to factor in the volatility of the instrument into that process. So if you're going to take the historical volatility, remember it was quite low, 14% in this example, so that's over an annual period. If you times by square root of 260, you get it back to a daily period. And then if you then said, well, if that's the range of the price, the percentage move over a given day, do I hold it for half a day? Well, I'm going to take half of that move as my stop loss. It's going to water down the return, but you're probably going to get a higher win rate because of that. So you've got a choice. You can be aggressive and use the price patterns, maybe the bands, the obvious key levels, even Fibonacci. We could go from the high to the low here. There you go. We got actually a corresponding key 61.8% Fibonacci line around 4250, where we drew that line on there. So a double confirmation where to maybe put your stop if you were scalping this trade. So it's down to you, but you've got to be consistent with that process. And then the question is, where do you get out? Well, again, some people count the number of blocks in they call it the risk taken side, so that's where your stop loss is to the entry point, and then you can get your 1-to-1s, 0.5-to-1s, 2-to-1s. I've got to say, when you're scalping, I think you're looking for a higher win rate, which means you can take a lower block size return. So if you're risking 6 blocks, maybe 3 blocks is your target. But I also like to use things like Fibonacci, like you see on here, and use them as my upside target. So if I was in here, I might be out on that first Fibonacci zone around about this block here. I might trail my stop up, lock in that break even, and then let it move to the next one, and then trail the stop up again. So I've locked in some profit and keep on going until I naturally get taken out. So takeaway here is, please be very consistent in your approach. Make your rule set defined before you even start, and follow it. Be on it like a rash, and monitor your results. Keep a log, see what works, see what doesn't. Give yourself a period of time to try and make it happen, and then, like I say, tweak and fine tune to get your scalping strategy really down to a good lean machine. And just some final exit ideas using the indicators. Well, if you go to the stochastics, you might get in on that one like we said earlier, and then get out as it comes down through the 80 for a long trade. Again, it's about points collection here. You're going to get some trades, if you see some of these don't last very long, maybe you're break even or just a small loss and you're capturing the longer trends. Or maybe the bands, see the yellow Bollinger Bands there, you come in on the breakout and you get out as it goes back through, or maybe you add on a moving average to this. That's your get out point. It crosses down, say hypothetically through there, you're out. So like I said, giving you a complete rule set here for how to scalp. It's getting the block size right first, making that small enough so it gives you enough opportunity within the day, within the boundaries of, like we said, liquidity, volatility, time. And then the key part of it is really defining your risk and trade management process. So I've given you a few strategy ideas on how to get in when you're scalping and how to get out, but like I said, you have to be extremely consistent if you want to be a successful scalping Renko trader. So there you go, that's my approach for using Renko charts in the world of scalping. I said works across all markets, but you have to plan it out carefully, and then when you are trading you have to be executing that trade plan from entry to exit very, very consistently. Now if you want to learn more about the Renko charts and that VIX strategy I mentioned, then those playlists and video links are coming up right now.